On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Rick Rawl, welcome back to the program.
Thank you for having me back.
So you've just sold some of your gold position, or some of your gold stock position, and you're buying physical. I think you've now finished that process. What was the rationale behind it?
I had a very large position in the small speculative golds, the type that would be represented here at this conference. And they've done so extraordinarily well that I've learned that you haven't made the money till you've taken the money.
Yeah, true.
In my case specifically, I was able to sell 25% of my spec gold positions and recoup 100% of my invested capital. So I sold 25% of my upside and I eliminated 100% of my downside. I didn't exit the gold sector. I went contra the market. In other words, I traded alpha for beta.
Yeah.
I bought physical gold, and then I bought a package of Franco, Wheaton, and Agnico Eagle.
Smart.
The other half of the money I forward shifted into the oil and gas business, which I think is as hated as gold was 5 years ago.
That almost sounds like blasphemy at a metals conference, trading in oil. What are you seeing in the? Obviously, we don't really cover oil and gas too much, but I can understand why it looks relatively cheap. Obviously, you're a value investor at heart. What's the rationale in terms of the oil and gas side of things?
$60 a barrel for many of the state-owned firms doesn't cover their cost of capital.
Yeah.
If the industry doesn't earn their cost of capital, either the price goes up or your car won't start. Those are the two choices. The really efficient producers do extraordinarily well at $60.
Yeah.
Because of the low price, relatively low price, the oil and gas industry worldwide is underinvesting about $2 billion a day in sustaining capital. And in, say, late 27, 28, that begins to impact their ability to produce.
I wanted to, before we go on, because I've got a few more questions around the gold space, and I really want to talk to you a bit about the copper space as well. We've seen a lot of the largest mines around this year have had some pretty catastrophic problems, so I really wanted to touch on that. But just quickly, because the last time we did have a conversation, it was purely based on uranium. It was just before we did the WNS. You were giving us loads of really nice tips to go out there and what we should be asking the people at the conference. I came away from the WNS probably as probably one of the biggest balls in a commodity as I've ever been was uranium, looking at it from that perspective. We had a chance to chat to Cameco. Roll forward a few months, they've obviously just done this Westinghouse deal, $80 billion with the US government. Obviously, I know you're a shareholder. What are you thinking of how that space is now evolving?
I'm a large Cameco shareholder.
Yeah.
I was cautious when Cameco first did the deal with Westinghouse because I was thinking, what does a mining company know about engineering?
Yeah.
The last two quarterly income statement suggests they know a lot,
Yeah.
which is handy. I would caution you about reading too much into the announced transaction because it's an announced transaction. In particular, the political component of it. Traditionally, politicians are lying when their lips are moving, so don't spend the money. What's useful about it, I think, is from a political and sociological perspective. Whereas 5 or 6 years ago, I was vilified for being in the uranium business.
Yeah.
Now these morons want to subsidize me. And that says a lot about what's politically palatable. Around the world now, stable, economical baseload power that doesn't generate carbon is front and center in everybody's mind, to the extent that even Congress, who has sort of PhDs in public relations, understands that there's political cover for uranium, and that's very important.
Well, it's not just that, though, is it? I mean, even when we were at the WNS, it was just announced, I think it was Microsoft had just signed up as a participating member. We were talking to the guys at Ocean Wall, and they were saying, well, we wouldn't be surprised if this time next year when we're sitting here, we've got Google at the table, we've got Microsoft, we've got Meta, we've got all of these big guys. And obviously, I do believe Microsoft have also purchased a nuclear facility in the US as well, right? So you also, how much are you seeing that this, because it's not even factored into most demand forecasts yet, but this sort of AI demand bubble or data center demand coming from in terms of the nuclear side?
I think that's important 5 or 6 years from now.
Yeah.
What's important now is that plants that all of us had in our demand forecast shut down are getting 20-year extensions.
Yeah.
That impacts demand in 2025, not 2030 or 2031. If you do net present value calculations, present matters a lot.
Yeah.
And so the most exciting thing to me is the continuing pace of Japanese restarts and closure halts. The other things that you talk about are extremely interesting in the longer term.
Yeah. Okay.
But you know, if you're using a 10% discount on net present values, cash flow that occurs after year 8 is effectively valueless. So I want to caution your listeners and readers to understand those for what they are.
Hi, I'm Kelly Malcolm, founder and CEO of Borealis Mining. We're reigniting gold production in Nevada, one of the world's most attractive mining jurisdictions. Our flagship Borealis project is 100% owned and fully equipped for production today, with power, water, workforce, permits, and even a modern ADR facility already in place. We've started crushing high-grade stockpiles, and our first gold pour is just around the corner. Historically, Borealis produced over 600,000 ounces of gold, yet much of our 21 square mile land package remains unexplored, with nearly 2 million ounces of historical resources and past drill results up to 67 meters at 16 grams per ton. The upside here is tremendous. But Borealis is just the beginning. Through acquisitions like our nearby Sandman project, with a strong PEA showing 35,000 to 40,000 ounces per annum and $121 million NPV at $1,800 gold, we're building a hub and spoke model designed to deliver scale and efficiency. Our vision is bold: to grow into a greater than 100,000 ounce per year Nevada powerhouse within the next 5 years. With a proven team, strong shareholder support, including mining legends Rob McEwen and Eric Sprott as major backers, and multiple catalysts ahead, we're positioned for both near-term cash flow and long-term growth. Follow our journey at borealismining.com or connect with us at info@borealismining.com.
I wouldn't mind asking you as well. I was talking to the guys at Cameco. Obviously, they're the sort of company that will, in the Athabasca, will mine the really high grade stuff, and you know, there's different processes around freezing, and costs can go up and whatnot. And then you look at places like Africa, where you got more like the Kriba stand type deposits, much lower grade.
Right.
You talk to someone like Cameco, they're only interested in the higher grade stuff, right? But do you see a place for that lower grade type of deposit? Are you investing in those types of companies where they perhaps sort of are more bulk tonnage type operations, or are you more interested in the high grade?
I have, if the deposits are very large.
Okay.
If the deposits are large, what it means is that you can have process failure in the first year or two, and you live to fight again another day.
Yeah.
And the deposits are also strategic, meaning that it's likely that they'll, because of their very size and scale, they'll likely attract financing that has as much to do with geopolitical positioning as it does all-in sustaining cost.
Yeah.
We saw the beginnings of that in the last uranium cycle, where some of those large, low-grade Namibian deposits attracted capital that would seem to have been more political than economic.
Right. Okay.
And I think it's important to note that that could be the case. The other thing is, in those roll front deposits in particular, the metallurgy can be very attractive. The extraction can be, I'm not saying it is, but it can be low cost enough that grade becomes less of an issue.
Yeah. Okay. Just one more question on uranium before we move on. You were mentioning obviously the Kazakhs at the time when we were talking. You'd said a lot of the middle management had left, a lot of really good quality people.
Yep.
You look forward even out to early 2030s, a lot of their production profile falls off a cliff by that point.
We've always been.
Have you gained any further information, any further knowledge of what's going on there?
I wish I could say I have, but I have not.
Okay.
The consequence of that is that there are too many unknowns for me to own Kazatoprob, which is unfortunate. It was my largest position some years ago.
Yeah. So loading up still on Cameco for the time being, though.
Yeah.
Okay. On the copper side, I referenced it very, very slightly there, but with obviously Kamoa-Kakula had the flooding, Grasberg had a mudslide. I think Codelco have had some problems with one of their large operations in Chile. Even Escondida has had some labor issues and strikes. turned into a bit of a disaster year for the big guys in the copper space. Obviously, we have seen a price reaction, but in my view, perhaps not a reaction. You would have thought, if I told you at the beginning of the year, perhaps, that all of these mines are going to have big issues, you'd think would be at $6, $7, $8 copper, wouldn't you? What's holding it back?
What you say is very astute. By our reckoning, about 7% of world copper supplies are shut in.
Yeah.
One would have expected that big of a production hiatus relative to how tight the market is to have a much more dramatic impact on price.
Yeah.
The only explanation I can give you, and I'm not an economist, is that the global economy is weaker than people think it is. You can have supply declines if you have weak demand and you don't move the price that much. The fact that the price moved up 5% while you shut in 7% of world copper supplies, remember Cobre Panama as an example.
Well, yeah, that was last year, yeah.
That's pretty dramatic. I see the same softness in the oil quote, which makes me think that what we're experiencing in real time is a slower global economic climate than the big thinkers would prefer that we believed.
So perhaps the data coming out of some of these, perhaps out of China, the US, you're not particularly believing all of it?
The part of the US I believe I live in is very strong, but I have no other explanation for the commodity quote than weak demand. I'd love it if somebody could, freshen my old memory, but it's difficult for me to explain in any other context.
Is it just a case of that there's some inventory still sloshing around and that we might see this parabolic move upwards in copper, or are you not on that camp?
I'm agnostic. I don't know.
Yeah.
That isn't, it really doesn't go to the heart of what I do.
Yeah.
I think there was substantial unstated copper inventories that came into the market 2 years ago. The Russians obviously needed cash. They had copper, they had nickel, and you saw the impact on those markets.
Yeah.
Today's circumstance, it really baffles me.
Obviously, I've spoken to you about nickel before, and I have a real soft spot for nickel, especially nickel sulfide deposits. And we spoke at PDAC.
Yep.
You were still in the process, I believe, at that point, still buying up the very much unloved nickel assets that still have a lot of potential. Are you still buying nickel assets?
I am.
You are? Okay.
Yeah, I am.
One of the questions I have for you is, and this, I'm probably completely wrong here, but one of the fears I have around nickel is you do sometimes see technological changes in mining that do rule certain deposits out entirely. Like, for example, like the UK, for example, used to have iron ore mining. It was very narrow iron ore grade widths and other deposits, and technology increases. It's now uneconomic to mine that in the UK. Is the introduction of these laterite deposits in the Philippines and Indonesia, how low cost it can be, the fact it can go into class 1 nickel, do you see that as a potential scenario where sulfide deposits are just never going to be able to compete with that, and the age of sulfide is over, or does the rock value of sulfide still remain true and we're okay?
I think what will begin to derail lateritic hegemony, if that's the right phrase, is that the cost of producing laterites is going to begin to increase fairly dramatically as the environmental destruction, particularly on Sulawesi, wrought by the laterite producers, works its way into the market. I flew over southern Sulawesi about a year ago, and I have to say, having been 50 years in mining, I'm not unaware of some of the aesthetics of mining, but the extent of the mud plumes from pushing the overburden offshore was astonishing. It was something to behold. We've begun to do social media monitoring of environmental concerns amongst, in particular, Indonesian citizenry, and the mitigation, not even mitigation, not writing past wrongs, but mining that material to Western standards, which I think increasingly the Indonesians will have to do, will raise the cost dramatically. The second thing that people need to understand is that lateritic mines are really, really energy intensive.
Yep.
And if I'm right about the direction of BTUs coming from conventional hydrocarbons, the cost advantage that they enjoy 2 years from now look very different.
So, in terms of your obviously you're making these strategic bets on nickel assets at the moment. How long do you think until they come good? what's your bull outlook?
You know, it's very odd. As I age and I have less time on Earth, I've become much more patient than when I was young and I had all the time left.
Yeah.
It isn't because my time preferences changed. It's because I've looked at my performance over decades, and really good hits, quantum hits, where you make a lot of money, take a lot of time.
Yeah.
There are probably 1 million people competing with me in the mining business for results that happen between now and January 2026. And there's about 15 or 20 that are competing with me in 5-year cycles.
Yeah.
And so that's where I concentrate.
Okay.
I found,
To be a junior?
you may or may not know this, but I've graded almost 100,000 portfolios.
Oh, I do.
At my website.
I've submitted my picks to you, and I've been humbled. No.
I'll tell you, a lot of people, and you can see it from their picks, a lot of people have the right strategy and they have the wrong tactics.
Yeah.
They buy something with the context that a certain commodity will do well over 5 years for good reason. And then they have trauma holding stock over a long weekend.
I know. Yeah.
And that juxtaposition of strategy and tactic, I think, is why people who I know who are smarter than me have done less well.
Essentially, it comes down to nerve, holding your nerve.
You know, Buffett famously said that he made more money sitting than thinking.
Yeah.
And
yeah.
he's pretty good, obviously, at both.
Yeah, well, they do say the best portfolio is a dead man's portfolio because he doesn't touch it, right? So, I just want to talk to you about this current gold. So it'd be rude of me not to talk to you about gold at the Precious Metal Summit. Obviously, we saw this. I think back in September, we saw gold hit around 4,400. We've then seen that pullback. It's now testing that 4,000 level. Really, a lot of sideways trading. And this is a question I'm going to ask Ronnie later as well, because I saw you in the room when he was speaking earlier, but he was talking about this mania around gold. When you see the mania, you get out. We saw the longest queue lines in the world or I don't know if you saw the photos of queues in September for gold.
In Australia.
In Australia and Hong Kong, it's just absolutely. And then on top of that, obviously, like you said, we hit these all-time highs of 4,400. Do you think we've already hit the mania phase, or do you think this is just a short pullback and then there's more mania to come?
I'm not a market strategist, but I think Ronnie caught it right.
Yeah.
I think it really depends on your horizon.
Okay.
I believe, in U.S. dollar terms, that the absolute purchasing power of the U.S. dollar declines by 75% in 10 years. And if you believe that, it's likely that over 10 years, granted that most people don't think in those terms, the increase in the U.S. dollar gold quote, the nominal gold price, increases in a way that measures or mirrors the decline in the purchasing power of the U.S. dollar.
Yeah.
Clearly, I didn't sell a bunch of those junior golds because I wanted to trade myself out of a profit. Clearly, I believe that on the speculative fringes of the gold trade, that things were excessive. But you know, I've gotten a lot of questions in the last 2 weeks about the pullback in gold.
Yeah.
And I guess one of the beauties of age is I say, has the gold price declined by 9% or has it increased by 100%? It's a function of your time frame.
Yeah, no, I agree. And to be honest, I was even talking about this back in Beaver Creek. I don't think the fundamentals of gold have really changed much. Like you were saying, it's unless I don't know about you, but I don't know many people that believe that the purchasing power of the US dollar over time is going to improve. I don't know many people who think that GDP to debt ratios are going to improve anytime soon and any deficit. Like, you look at the way the world is at the moment, do we think the world's problems are going to be solved, you know, next month, next year? I'd say most people probably don't. And I think that sort of holds the backbone for gold, surely, doesn't it? All of these drivers of gold, all this weaponization of the US dollar, all the central bank, nothing's changed. Even so, we've seen a pullback, but the fundamentals are still there.
I think you've addressed the question perfectly. I ask myself, when people ask me where we're in the gold bull market, what would cause me to sell my gold? Well, the end of the weaponization of the US dollar globally, unlikely. Solving debt and deficits, highly unlikely. reaching a political accommodation to reduce the $120 trillion in net present value of entitlement obligations in the U.S.
Yep.
Basically telling old guys like me, yeah, you paid in for 60 years, but you're not getting out.
Yeah, no, it's clear.
I don't reckon that happens.
No.
I also believe, and this is an unpopular point of view, that the real rate of deterioration of the U.S. dollar isn't measured by the CPI. That number, if you believe it, is 2.9. It doesn't include food or fuel when it's inconvenient.
I know, it's crazy.
You know, I mean, an index that doesn't include lunch is of little utility to me.
Yeah.
I believe that the purchasing power of the U.S. dollar is declining, not relative to other currencies, but absolutely, at about 8% compounded.
Yeah.
If you believe that, then the yield that you get on a U.S. 10-year Treasury is strongly negative.
Yeah.
Gold does well when investors and savers are concerned about the maintenance of their purchasing power in fiat instruments. What could make you more nervous than a guaranteed 4% annual reduction in your purchasing power for 10 years?
Well, yeah. The idea of owning a bond in that environment, what's the point?
Correct.
Yeah.
And that is a very bullish scenario for gold. Now, I'm old enough to remember too, Peter, in 1975, in the midst of that epic bull market, you know, where gold ran 30-fold, in 1975, the price of gold fell by half. You could have dramatic cyclical declines in secular bull markets.
Yeah.
And I was sort of amused to what I guess I'll call newcomers to the gold business being freaked out by a 7 or 8 or 9% decline that we've just been through.
Yeah.
Perhaps it's my age, but it didn't even register as static to me.
I think like you said, it's especially for people like us who monitor the gold space, especially on the gold equity side. I can live with $4,000 gold at the moment. I'm sure.
Well,
I'm sure you can as well.
well,
Yeah. Just last question. In terms of, you were talking about, you bought Franco, you bought Wheaton, you bought Agnico, obviously some really strong, obviously two of the largest royalty companies in the world, and then obviously what most people regard as the A tier of major. Are you still looking down the exploration sort of pipeline in terms of junior mining stocks?
yeah, absolutely.
Yeah.
I'm not going to add more capital to the junior space.
You're not.
I'm going to reallocate with money I already have in the sector.
Yep.
Buffett famously says, regard your portfolio as a hog farm. You have room at the trough, which is your portfolio, for 10 hogs.
Yep.
If a skinny one comes in, you got to kick an old fat one out. And so that's how I intend to play the game.
What new skinny ones have come into your portfolio in the last?
Nothing, which is more my fault than the sector's fault. There's a lot of stuff out there. I, as you may know, have started a bank. I was me quite busy.
You know what I was going to say to you? I hardly recognise you without your Battle Bank shirt on.
You know, it made my sort of haberdashery easier. Yeah. I could decide between a blue Battle Bank shirt or a black Battle Bank.
I often see you in the black one. Yeah. I don't know how much time you got left because I know you're at the show and we're busy. But what is Battle Bank? Because I see you wear this shirt all the time. Would you mind just explaining it in simple terms?
I'd be delighted.
Yeah.
Battle Bank is a newly chartered U.S. federal bank. It'll be fully operational. It's operational right now, but it'll be fully operational in mid-January. It's a successor to an earlier effort of ours called Everbank, which we opened in the year 2000 and sold in 2015, I think. That was an online-only bank. Okay. Although we acquired some branches in the financial turndown in 2009. We were prepared and some of our competitors weren't. But it focused on a few things. Rather than having a plethora of deposit products, most of which are designed to hoodwink you into depositing money and not receiving interest, we have one.
Okay.
A no-fee account that you can write checks against, do whatever you want, that pays interest. People like the simplicity. They like the fact that you're honest with them. We don't believe that investors should be constrained as to what currency they bank in. So rather than having federally insured deposits in U.S. dollars only, we have them in U.S. dollars and 20 other major currencies.
Okay.
If you're a first-generation American businessman doing business both in Great Britain and the United States, being able to maintain deposits and importantly shift money between them at much reduced exchange rates is very useful to you,
That would be useful to me.
and nobody's doing it.
Yeah.
I mean, Royal Bank of Canada will do it with $10 million minimums,
Yeah.
and we do it with $10,000 minimums. It's a sort of a quantum
Right,
difference.
okay, interesting.
And then on the asset side, most American banks, for whatever reason, don't believe that bullion is good collateral.
Yeah.
I've dealt with gold owners my whole life, and I think bullion's superb collateral. So we are the only bank in the United States that offers what are in effect margin loans, secured by the borrower's gold, silver, or platinum and palladium.
Okay, interesting.
We found, first of all, it's extraordinary collateral. If we had to foreclose, we could sell it,
Yeah.
click of a finger, 24/7.
Yeah.
I've also learned in 50 years that individual investors I've known who have had fairly large stores of bullion are very prudent humans. Lending money to prudent humans is better than lending money to imprudent humans.
Yeah, true. True. So just in a say, for example, I don't know, someone like me runs a business or invests in gold. What, very, very simple terms, why would I want to sign up for Battle Bank?
Well, first of all, if you're an independent businessman who has some gold, and you from time to time experience working capital needs, not difficulties, but needs in your business, growth requires capital.
Yeah.
The idea that you could access the capital that you had tied up in your gold without having to sell it, in effect becoming your own bank,
Yeah.
borrowing from yourself without having to sell your gold or silver, you're the ideal customer.
Yeah.
Absolutely the ideal customer.
Okay. All right. We'll have a chat after this.
Clearly, there's several of you. When we opened Everbank in the year 2000, our customer backlog, the people who indicated that they wanted to do business with us before we opened our doors, was a distressing number. It was 0. At Battle Bank, there are now 19,000 people who filled out the
Oh wow.
indication of interest, telling us not just that they wanted to do business with us, but what kind of business they wanted to do. So it's going to be a very, very strong start.
Nice. Okay. And so when's the actual launch? When are people?
January 15? I say that. We were in
January
gestation
15th,
for a
okay.
very long time.
Yeah.
The prior banks that I've done, you registered at a de novo bank with the regulators. You worked yourself through their questions. They gave you a charter.
Yeah.
Every bank took us 19 months. This bank took 54 months.
Wow.
Partially a change of administration. You know, the top of the various regulatory agencies were allowed by the Republicans, if they were Democrats, to pursue other employment opportunities. So.
Nice. Okay, so you're pretty busy. I guess any parting thoughts or wisdom? What are you looking out into 2026? What are you focusing most of your time on?
I have a very, very full portfolio now.
Yeah.
In the best of the best. Be it oil, industrial materials, gold, a really robust portfolio. I'm really proud of it. What I'm doing now is honing my shopping list.
Okay.
Something that I last did in 2019.
Yeah.
And looking for fairly dramatic pullbacks. New people to this industry don't understand that 25% pullbacks are commonplace.
Okay.
And a 25% pullback in the metal could easily yield a 40% pullback in stocks.
Yeah.
I'm one of those who believes that out of 3,000 public companies worldwide in the mining business, perhaps 300 or 350 have value.
Yeah.
So I'd like to develop a shopping list with a subtext in terms of my estimate of their value. And when the price sells at a discount to value,
You can-
X any other circumstance,
Yeah.
write a check.
Interesting. Okay. Rick, thank you so much for your time.
Pleasure. Thanks for the opportunity.